record this session. Oh, did you guys hear that?
Yeah.
Yeah, okay. I usually like to let people know. So we're going to record it. And basically, it's Ross's show. Just to let you know that Ross is really no stranger, obviously, to this topic. For people that know him, are no stranger to Newfoundland and Labrador. So Ross is a longtime friend, and he's literally wrote the book on risk management as relates to some of the subtourism's higher risk operations. So a little part of Ross's bio that I think is important is he's conducted over 100 risk management and adventure tourism business development consulting projects in 38 countries. He authored the textbook Legal Liability and Risk Management in Adventure Tourism. So as I said, he's literally written the book. Ross has also done and still does a lot of accident investigations, and he acts as an expert for the defense in numerous tourism lawsuits around the world. So he's worked in Newfoundland, Labrador, and he's been a big part of the Torngat Mountains National Park project up there. So today he's going to go through a bunch of critical topics. Really, we're trying to, this whole process is to get our head around our insurance literacy, if that's the proper term, because we've been struggling a lot in Atlantic Canada in the tourism industry to figure out how we can deal with insurance and the craziness of that. And this session today will definitely help us come together and get a risk management plan together, and that we should be able to find and optimize our insurance and find some better insurance opportunities. So I know we've all done a million Zooms. I'm going to ask you if you could put yourself on mute. Everyone but Ross will be on mute. And some people, depending on where you are, maybe it's better if you turn off your video because of your internet capability, but I'll leave that up to you guys to figure that out. If you have any questions, you can type them in the chat box. At the end, Ross is going to leave some space for questions, but I'll keep monitoring the chat box. And if someone has a question that's pertinent to a topic Ross is on, I might just jump in with your question and say, Ross, give us a second. Here's a pertinent question. Otherwise, the questions that you have, we'll compile them and we'll ask them at the end. So without anything to delay us, I'm going to pass it over to Ross for his presentation. So Mr. Kluche, it's yours.
Thanks, Dan.
Okay.
Can you see my mountain screen there?
Yes, I can.
Then we're good to go.
Yeah.
Hello, everybody. Thanks for showing up today. And hopefully, by the time we're done, you'll have a lot better understanding, I guess, of both risk management, but also insurance in the adventure tourism industry. Everything that I say here will be relevant to non-adventure tourism products. So other tourism pieces is totally fine. What I want to do today is to, I guess, kind of look at an agenda a bit like this. HNL asked me to look a little bit at insurance and risk management, and really, I guess, provide an understanding as to how this actually works, because most businesses don't really understand how the insurance piece works, why we have markets like we do right now where things are pretty tight. I wouldn't call what we're currently in a crisis. You will if your business can't get insurance, but on the kind of big scheme of things, we're not really into crisis mode at this point. So what I want to do is I want to just look a little bit at a case study, and then look at loss control programs and kind of show you a structure for how that happens and what you need to articulate to insurers to better stand the chance of getting insurance and also reasonable premiums. The tight market that we're in, I've been in the adventure tourism business for 47 years. This is my 47th year, and I've seen 4 real tight insurance markets, and much tighter than what this one is, at least 2 of them. So I want to talk about those just a little bit and some of the strategies. And then what I want to do is I want to kind of lead us to maybe what individual businesses can do to stand a better chance of getting insurance and also reasonable premiums, but also talk a little bit about group programs, because in the current market, there is potentially a role for HNL to play here. So I want to kind of lead us towards that, if you can. So that's really what I want to do today. Take an hour and a half or so, and then lots of questions. I'm happy to take anything. Just a little bit of terminology. Some of this will probably be just a little bit new,
Yes. Yeah.
but so
I,
somebody's
I
not
can't.
on not on mute. Can you
Well,
just
yeah, because Debbie had it straightened up last night.
do you
Yep.
mind muting your microphone? Thanks a lot. So you're the business, you're the applicant, and the responsibility really becomes on you to present material to ensure an underwriter. So that's called a loss control program. Some people call it a risk management plan, but a risk management plan is really a document that describes your loss control program. I'm going to give you the structure for the loss control program. And then I've given Stan a bunch of materials that after we're done today, he'll be able to send out to all of you as reference materials that'll help you, give you resources to be able to put this kind of thing together if you want. Most of you have dealt with a broker or an agent, an insurance broker or an agent. The broker really can sell all different manner of product from a variety of different insurers. An agent typically is focused on kind of selling, you know, one insurer product for the most part. So in British Columbia, we have a insurance corporation of BC, which provides all the car insurance, and they have agents that only sell their product. But other brokers could go out and, you know, source all kinds of other kind of stuff. The insurer is really the entity which gives you your policy, and they're the ones who take on your business risk. And I'm going to word it that way because what you're doing when you take out insurance is you're transferring some of the financial implications of accidents and potential litigation and payouts to an insurer. So they're taking on your business risk, which means they need to understand what it is they're taking on. A lot of times they don't, but that's where it comes from. Now, there's a number of insurers in the tourism market. In the adventure tourism market, there are a number of insurers. You'll be most familiar probably with Lloyd's of London, who, you know, really isn't an insurer in the classic sense of the way. They're, I guess, the manager of a whole bunch of different syndicates, different groups of people. Like if we decided, the people on the call today, we wanted to form a syndicate and insure adventure tourism businesses, then we could do that. We can go to Lloyd's, we can pay them a bunch of money to, you know, help us get set up and structured. We could underwrite a whole bunch of insurance for different adventure tourism companies. We would take on the risk and we would make any profit if there was any. Well, that's kind of how Lloyd's works. They've got hundreds of these little syndicates, and the syndicates decide what it is they're going to insure. And there are a few, not that many, but there are a few who underwrite or insure adventure tourism. I'll talk a little bit more about that. The underwriter is the entity that actually analyzes your business and analyzes the risk and makes a recommendation to the insurer whether to cover it or not. Sometimes even make a recommendation around the premium. So the underwriter is who you're talking to. You're not talking to the insurer. The chance that the insurer will actually see your proposal or any information about your business is almost zero. They'll have an underwriter do that on their behalf. And in Canada, there are a number of underwriters who look at tourism and adventure tourism proposals, because that's what you're doing. The broker sends your proposal to the underwriter. The underwriter looks at it and then makes a decision on behalf of the insurer, right? So it's to a certain extent. So the underwriters aren't going to spend an hour looking at your material. They're not probably going to spend 30 minutes. They're going to spend a few minutes. And a lot of them, it's a mathematical piece of software that does the analysis. Sometimes you actually have individual humans called underwriters who will go through your proposal and make decisions around it, which is ultimately what we want. That's ultimately what you want. Um, Now I need to explain two other terms, which most people aren't really familiar with. But a managing general agent, there are a bunch of these in Canada that act on behalf of tourism and adventure tourism insurers. And so what an agent can do is actually commit the insurer to insurance contracts. All right. And so they can actually, without going to the insurer with every business proposal, they can commit the insurer to cover you. All right. So that's what they do in that sense. Now they have a lot more leeway than a regular underwriter does. And then a managing general underwriter, often these two are the same. So an MGA and an MGU are the same. And a managing general underwriter can actually underwrite on behalf of the insurer and can commit the insurer to all kinds of different things. So in reality, there are about 3 MGA, MGUs in Canada who have put together programs for adventure tourism. I'm going to introduce you to one of them later on. Um, all 3 of these are Western Canada based. They're in British Columbia. And I guess what you need to understand is compared to Newfoundland, um, a lot of the rest of Canada is a much bigger market for these guys than Newfoundland and Labrador is. And so that's why they've started out here. So the kind of way this works is a managing general underwriter or an MGA, an agent, will get together and put together a program to insure, right, adventure tourism in our case. And they'll get together with lawyers, they'll get experts, they'll get the insurer, they'll be the underwriter, they'll put together the rating, they'll put together the underwriting process, meaning how they're going to do the analysis of your business. These guys are key, right? Because if you take your business to a generic broker who sends it to a generic underwriter, you're probably not going to get coverage, especially in the tight markets of today. So the key guys are the MGAs and the MGUs. If you research those terms, you Google those terms, you're going to come up with a bunch of them in Canada, and you're going to be able to see a little bit of their programs. And as I said before, when we're done today, I'll introduce you to one of them. Now, there are 3 of these that focus on adventure tourism based in Western Canada. None I've talked to, all of them, none are insuring in Newfoundland and Labrador. So there's one that has a base in Nova Scotia, and I'm going to recommend that you and or HNL talk to them about whether they could expand their coverage area to Newfoundland and Labrador. In British Columbia, the scale here is fairly big. So the adventure tourism businesses in British Columbia sell over $4 billion of product. And the tourism market here is 21.5 billion. So it's huge, right? And Ontario would be kind of similar and Quebec would be kind of similar. Fairly big numbers, which is why the MGAs and the MGUs are based here. Okay. This you'll know, premium is what you pay per year to get your policy. The policy amount here is, how much coverage you're being offered. So for example, $2 million is a pretty typical amount. $5 million is a pretty typical amount in Canada. In the United States, I do a lot of work there, expert work, defense work. So defending adventure tourism companies and helping lawyers do that. In Canada right now, I'm working a case that's 2.2 million. That's the claim. In the United States, I'm working a case right now, which is 20 million US. So if you had a $5 million policy, it doesn't come close to covering 20 million US. I actually worked a case in the United States where the business, the court ruled against the business, and it was 35 million US dollars. They were carrying $20 million of coverage, so the business had to write a check for the other 15 million. So in Canada, we complain because we take out 2 million or 5 million. In the United States, all the cases I've worked are about 10 times the amount that we see in Canada. So for example, the case I'm working in British Columbia right now, the claim is 2.2 million. That's the coverage. And out of that would come the lawyer's defense, expert work like my work, etc. So you're probably going to end up with coverage of about 1.9 million. If the court rules that there's 2.2 million, the business has to pay. The insurance will have about 1.9 million left over after lawyers and experts fees. So they're going to pay the 1.9 million. The business is on the hook for the other 300,000. So that's kind of how this works. So the policy amount is pretty important. In normal times, not this year, to take your policy from 2 million to 5 would actually add about 50% to the premium. That would kind of be normally how it is. So people ask me how much insurance I take out in Canada. I would say most of the settlements I see are in the $2 to $3, $4 million range. A lot of them are smaller, much smaller, but we see them in there. So if you're carrying $2 million, it may not be enough. Now, it might be a Newfoundland Labrador, but out in British Columbia, it won't be. Now, the other thing that you can control is the deductible. Typically, this is your risk. This is the amount that you're going to pay to defend a case. So if you've got a premium, a policy of 2 million, you've got a deductible of 5,000, then you're going to pay the first $5,000 in that defense. Now, if you've got a deductible of 50,000, this premium is going to be lower. So if you're having trouble getting insurance, one of the strategies you can do is go to the broker and say, please tell the underwriter that I will take a much bigger deductible, right? Because that puts you on the hook. It motivates you to do a better job, and it reduces the insurer's risk by that amount. In 1981, I'll talk about that in a second. So now there's three kind of typical types of insurance, and I'm going to focus only on the liability insurance here. But property insurance for adventure tourism right now, remote lodges and things like that, is actually really hard to get, even here in British Columbia. Directors and officers insurance, right, especially for not-for-profits and things, it's fine. And then the liability insurance is what would cover you in the event of a lawsuit. So that's really what I want to talk about. Now, I've seen, as I said, I've seen three other big crisis, what I would call crisis, in the adventure insurance market. In 1981, we had a really significant crisis. There was no insurance to be had anywhere. And the big companies in the States and in Western Canada actually developed two different programs, two different strategies. So based out of Colorado, one strategy was to actually get a tiny insurance policy of $200,000, not 5 million or 20 million or any of that. Insurance policy of $200,000. And the strategy there was that would be enough to pay for a really aggressive defense. And then at the end of that, there'd be nothing left over for the plaintiff to get. And so that was one strategy that in 1981 happened in the United States. In British Columbia, this is when waivers, as we now know them, really started. There was a little bit of use before this, but in British Columbia, you need to have a government permit to work on the land, like a park use permit. So if you wanted to go work in Grossmore National Park, you get a business license or a park use permit from the national park, and that would enable you to work in the park. But they would have conditions on that. One of them would be they'd require $2 million of insurance, right? And maybe other stuff. And in British Columbia, it's like that everywhere. It doesn't matter what adventure tourism business you are, you need to actually have a license on them to work. So one of the things that happened in 1981, there was no insurance to be had. And the industry proved that to the British Columbia government. They said, we cannot provide insurance to work on the land. And so the government lawyers worked with some of our lawyers and they developed the waiver. And the government said, all right, until there's insurance, right, you can use this legal contract, this legal release, and still access the land for you to work. And you know what happened? As soon as the insurers saw that contract that was endorsed and written by government, they came back into the marketplace. And ever since then, they've said, we'll insure you, but you have to use the waiver. So that's really when the waiver, as we know it in Canada, was kind of started. 2001, when 9/11 happened and the towers were destroyed, there was so much uncertainty in the marketplace that we had what we would call the second big crisis. If you notice this is 20 years from 1981. If you notice this is 20 years from 2001. So there's kind of this 20-year cycle historically. In 2001, I did a bunch of work in Australia to develop a I guess, strategy to get the insurers back into the market, because in Australia, there was no insurance at all to be had. And in Canada, it was pretty tight. So that brings us to today. You all were around for 2008. We had some uncertainty, but I wouldn't necessarily call what happened in 2008 a crisis. So where are we today? That's where we are. Similar kind of thing. Now, why are we kind of in the situation we're in? There are a number of really good reasons, none of which relate to you at all. This is not about the risk of your business. It's not that you've had fatalities and you're uninsurable, right? It has to do with macro global trends which have infected the insurance industry. So last year, because of COVID, right? You know, the stock market crashed and lots of uncertainty and lots of losses. Now, you need to understand that the insurers don't really make their money off your premiums. The premiums is their cash flow, which they then reinvest, and they make money both off your premiums, but also on their investments. So when the stock market crashes, they lose money, and that totally impacts the cash they have to put policies. And low interest rates ever since then mean that in the bond market, there's low investment profitability. You can't make money in the bond market at 1%, right? It's like your savings account at the bank at kind of rate 1% right now. So these guys aren't making any money. And then you've got the British Columbia forest fires, you've got the Fort McMurray fires, you've got the California fires, you've got COVID, right? You've got all the failing retailers and shut retailers in the last year. And so these create tremendous uncertainty and risk for the insurers. This is why we have a tightened market right now. Now, there are a couple other reasons too. There's not enough insurance supply and there's way too much demand. So they are limited, an insurer is limited to how much policies they can underwrite by how much cash they have, how much liquid assets they have. So the bond market, the stock market, savings accounts, those kind of things, these are their reserve. And the Canadian government, by law, makes the insurers have a certain amount of liquid assets. And they can underwrite a certain amount of policies based on the volume or the amount of assets. So for example, if the law is the insurer must have 10% liquid assets for every policy they write, that means that for every $10 million of policy, which is insurance risk, they have to have $1 million of cash sitting around that in under 60 days, they could liquidate. And so as that cash amount decreases and goes down, the amount of policies they can underwrite goes down. And so you may have had a $10 million policy last year, but that $10 million means they have to have $1 million of cash to offset that. That's a government law. And so as soon as their assets decrease, they have to get rid of policies. And that's what's happening right now. All of these things listed above have decreased their cash, and so they have to dump policies. Some of you are policies that are being dumped, right? It's just that simple. And so that's kind of how this works. It's got nothing to do with the risk of your business in that sense. It has to do with maybe how much money they can make. So for example, that $5 million policy that they offer somebody in Newfoundland, Labrador, they might be able to get $1,500 for premium. In British Columbia, if they took that $5 million, they might be able to get $3,000 premium. They're going to go with the $3,000 because the businesses here, generally speaking, would be more profitable and would absorb that and have a better ability to raise their prices to absorb that business increase. Okay, we're getting there. Now, with very few exceptions, there are no insurers who specialize in providing adventure tourism insurance. There are 3, right? The same can be said of brokers and underwriters. There are very few brokers who actually specialize in adventure tourism. There are 3. They are MGAs and MGUs who can also broker, sell policies. And they've put programs together with the insurers and the underwriters and the experts and the lawyers. So there are not many that do that. So there's 3 in Western Canada. And what they've done is they've combined the role of an MGA, the insurer, the underwriter, the broker, the defense lawyers, the experts, and they've put together standards and accreditation program. So this is the package which in Western Canada enables us to have insurance and always has. And what I want to do is just talk to you a little bit about something much higher risk than the activity you're in.
Ross,
Yes,
who are those 3? Is that
those 3 are Equa,
yeah,
Goujon, and specialty risk. And I'm going to introduce you to specialty risk.
okay? Thank you.
Okay. Now, Equa and Goujon, I've talked to personally about today's presentation. Both declined to come because they do not have an agent in Newfoundland and Labrador that can offer you their program. So I'm going to suggest at the end that maybe HNL has a role that they can play here. And I'll coach that a little bit. Now, just a quick case study, because I need to put this in perspective for you. HeliCat Canada, I spend 40% of my time as the executive director for HeliCat Canada. This is a trade association for helicopter and snowcat skiing in Canada. And it does 4 things primarily. It funds research, it does education, and it does lobbying, it does advocacy of government. So those are 3 things which HeliCat Canada does, right? Not unlike any other industry association like Sea Kayaking Guides or something like that. But it also runs a trade accreditation program. And this is what I want to talk about. The trade accreditation program is what enables helicopter skiing and snowcat skiing in Canada to be insured. Okay, so I want to describe that to you. Now, in 50 years, HeliCat has had 46 avalanche accidents and 83 fatalities. Most of those fatalities are guests. This does not include helicopter crashes or other types of fatalities. So I'm going to guess that there's been well over 100 fatalities in those 50 years, which is 2 fatalities every year on average. And yet we still have insurance. So why is that? Because if Newfoundland and Labrador had 2 fatalities every year sea kayaking, you wouldn't have insurance at all, ever. You wouldn't see it again. And so the question becomes, why is something as high risk as helicopter skiing, right, still insured? Now, there are 40 about, less than that, helicopter and snowcat ski companies in Canada. HeliCat represents them, right? And they have sales of about 300 million plus. The one thing about the helicopter and snowcat ski industry is they're 90% foreign guests. So March 2020, they shut the industry down and we lost 30% of the season. And this last year didn't open, they lost 100%. So this coming winter, it totally relies, like some of your product, on the international borders being open. So here's what the accreditation program looks like. And I'm going to describe this to you. HeliCat Canada is an objective third party that sets operational standards for the whole industry, right? So the businesses who become accredited, because that's key, by HeliCat, right, they have to meet all those operational standards. Membership in HeliCat is based on achieving full accreditation, which means they're inspected, right, every 5 years, and they do a self-declaration that they meet the HeliCat standards every year. We maintain an incident reporting database. We provide language waivers in 17 languages, because for a waiver to be effective, it needs to be in your client's first language. If they're German, giving Germans an English waiver probably makes it non-defendable in court. Now, this whole accreditation is supported by expert defense lawyers, specialized brokers, MGAs and MGUs, defense experts, and a very educated Lloyd's of London insurer. Now, there are 2 programs, 2 Lloyd's of London programs through 2 separate brokers, Goujon and Equa, that each have their own program, right? And so if I'm a heli ski company, I can go to either of those brokers. The programs look pretty similar, but they're different Lloyd's of London syndicates who underwrite that. Now, I just want to go from there. So this accreditation and these external standards and the accreditation process and the waivers and the program that enable something as risky as helicopter skiing to still be insured. So let's talk about defense so we understand this. When I do defense work as expert, I'm employed through a lawyer by the insurer. So I'm paid through the law firm by the insurer. And in Western Canada, we have a couple of lawyers who specialize in adventure tourism defense. We have a whole slate of experts, depending on what it is, the kind of accident it is, that specialize in adventure tourism defense work. So our defense is that you are not at fault, right? So what this means for you is that you need to know, for the activity that you're doing, what the industry standard is. You need to meet that standard. You need to be able to prove that you met that standard, because if you do, you're not negligent, right? As soon as you don't meet the industry standard, now you're negligent. But my experience in Atlantic Canada is that and I've done fatality investigations and I've done defense work there, is that a lot of the businesses don't actually understand what the industry standard is. They're doing whatever they're doing in Newfoundland, Labrador, or they're doing whatever they think is right. That doesn't mean it's defendable. So what your job is to set the defense up for success. When you're proposing it to an insurer, to an underwriter, that they insure you and take on your business risk, you need to be able to demonstrate that you're defendable and that they're not going to lose a case. We don't lose many cases. In the heli ski world, we don't lose cases anymore. We barely see litigation anymore. We've had so much success at defending cases, right? And so that's your job, which means documentation is super important. Waivers are super important because this is your contract with the guest around negligence and lawsuits. That there's appropriate incident investigation and reporting, there's safety talks, etc. And I'm going to show you what I mean by all of that in just a second. Now, this is adventure tourism. What I just said doesn't mean that you have to make everything completely safe. It means that you have to not be negligent. Adventure tourism has risk to it. Just look at heli skiing, right? On average, over 50 years, there's been more than 2 people a year die in British Columbia heli skiing, and yet it's still an insurable risk. Why is that? It's because the insurers don't pay out. They don't lose very often. So it's still a profitable segment for them because the risk management and the loss control program is so tight. It doesn't mean that you have to take bull riding and make it completely safe or whatever sport you're doing. But you need to think about negligence and not be negligent. So let's just talk a little bit for a few minutes about what a loss control program looks like. Now, you know that in your business, you do a whole bunch of different incident management strategies. You have your guides do some things pre-incident. So for example, they train in first aid and emergency response, right? And then the guides do certain things post-incident. Right? If you have an accident, they're doing record keeping, all those kinds of post-incident things. But the business also does things as well. The business prepares pre-incident. They decide what their safety talks are going to be. They take out appropriate insurance. They have guide qualifications and certification and all these kind of things, right? And then they also do appropriate post-accident response. So, you know, there's stuff we do in the field, and there's also stuff that we do as a business. And this is pretty straightforward. We all totally understand that. If I was to describe a loss control program, and there's a handout later on that's got this in it, so don't feel like you have to copy this down or anything. There's 2 elements to this. One is risk control and the other is risk financing. And what I'm going to try and do is give you a structure because we're using insurance language now, right? This is insurer language and what they understand. So when an underwriter sees them come at them, now you're speaking the underwriter's language. So there are 4 kind of types of risk controls. First is, what are you doing to avoid accidents by not engaging? So for example, if I run a whitewater kayaking company and I decide that we're not going to run this rapid, we're going to portage around it, I'm avoiding a big hazard. So I've made an avoidance decision. Now, if I make those decisions in my business, I need to be able to communicate that to the underwriter. if I don't give them any of this information, they are guessing, right? And it is not their responsibility, and they're never going to come back to you and ask for more information, right? Your broker knows this. A broker who sends your application for insurance forward with a couple page application is probably not a very good broker. You need a broker that's going to say to you, you know what, there's not enough information here for an underwriter to gauge your risk. Now, when times are good and the insurance market is super soft, then no problem, right? If there's lots of cash in the insurers and they're underwriting everything, they're sending policies for everything, that's fine. But in a tighter market like we currently have, there's just no way. Okay, the next one is loss prevention. What are you doing to reduce frequency? So that same kayak company, I might say, we're going to paddle grade 1 to 3 whitewater, right? 1 is flat water, 2 is moving water with bridges and things, and grade 3 is, you know, has some whitewater in it. But we're not going to paddle grade 4 or 5 water. What I'm doing, right, is I'm actually reducing how often we have the risk. Same thing with severity. So if I wear life jackets, then I'm reducing the potential severity of falling over. Sea Kayaking Company doing the same. Everybody's wearing life jackets. If somebody dumps, right, the severity will be less because the likelihood of drowning is less. And then, are there ways that I can spread my risk or share the risk, right? And so, for example, if I don't own vans and I lease my vans and the van's insured by Budget or Avis, right, then I'm actually sharing the risk of a vehicle accident, and I'm transferring some of that responsibility to Budget and Avis's insurance, not my own. Okay, those are the controls. And what I'm going to propose is that this forms the basis for your risk management plan. And the risk management plan is the written articulation of everything you do in these 4 areas. And it needs to be probably pages long, depending on what your business is. Now, how do we finance, right, this whole thing? We'd use insurance, which is what we're talking about today. And okay, we're having trouble getting it, or it's pretty expensive. That impacts what we can do, right? We might take out less insurance. We might increase our deductible. We might join a group program, whatever, okay? We also transfer, but what this is this is a strategy where we're transferring the financial implications to an insurance company. And we're doing that intentionally, and they are taking on the risk intentionally, which is a huge ask, actually. It's massive. The next risk transfer piece is when we use subcontractors. Let's say, for example, I'm going to subcontract this rafting trip out to a rafting company that isn't my employees and it's not my raft. And I'm going to have them have insurance, and I'm going to have a contract with them. And so what I'm doing is I'm transferring the risk of an accident to that subcontractor, right? I've got a choice. I can hire employees, keep all the risk in-house, or I can subcontract that out. So that's a transfer technique. I also transfer to guests through the use of waivers, which is exclusions of liability. And I'm going to talk a lot about waivers in a little bit. And then the last piece of this financing piece is it's impossible to transfer all financial implications. So you're going to retain or absorb some, right? So for example, there's a social license risk where your business might be seen as less safe if you have an accident. So you're going to retain whatever that implication is. If you've got a $50,000 deductible on your insurance or a $10,000 deductible, you're going to retain that amount because you're going to pay that amount, right? So it's impossible to kind of end up with transferring absolutely all the financial risk. And so the more risk, the more financial risk you are prepared to accept, then the greater the likelihood of getting insurance. So for example, in today's market, if you said, I think the likelihood of me having an accident is really slim for the next 2 years, because in 2 years, this insurance market is going to change again. It's going to get softer, 2 or 3 years. The tightness you feel this year, it's not forever. It's only a 1, 2, maybe 3 year thing, and then it's gone, right? And the market will soften again as soon as the insurers have more cash to invest. So if you say, well, I'm going to take $100,000 deductible, right? And I'm going to offer that up to the underwriter. And I'm going to say to the underwriter, I need $2 million of insurance and I will retain the first $100,000. Compare that to somebody who says, well, I just want a $1,000 deductible. I'm only going to retain $1,000, right? Those two offers are completely different. Now, I know $100,000 is probably too much, but I'm using it, exaggerating a bit. For some companies, it is not too much, right? At all. If it's an option of getting no insurance and not being able to operate, or taking a $100,000 risk for the next 2 years till the market softens, they're going to take the risk. Okay. We don't need to do this too much, but you need to draw a difference between hazards and risk. Hazards are the things that can kill guests or hurt guests or staff, right? So avalanches and rockfall and sweepers in rivers and bad weather and, you know, wind on the ocean, those kind of things. And risk is the likelihood and consequence or frequency and severity. So you need to ask yourself, right? What are the odds? It could be expressed in percentage. What are the odds I'm going to have a fatality or an accident? What's the likelihood of an incident? And what can I do to reduce that? And what's the consequence? What are the impacts? Because this is the question the underwriters are trying to answer about your business. If they have no information and they go, oh, okay, this is a whale watching company. They're using 20-foot Zodiacs in open ocean. I think that's risky. They're going to blow you off, right? But if you build a case where you're doing that is in the bay, it's protected, you know, there's no wind, all this other kind of stuff, right? Then you're educating the underwriter about your business. Otherwise, they're just guessing about it. Okay, what's insurable is important because not all things are insurable, and you might decide to pull some things off the table. So for example, if I have a risk, right, that has potentially low frequency, it's going to happen maybe never, but if it does, maybe every 20 years, right? So it's not going to happen that often. And when it does, it's of low consequence. So I'm going to have a broken ankle in every 20 years. Or I'm going to have sea kayaks dump over every 10 years. And that's the frequency. But the consequence of that happening is low, right? Nobody's going to drown. We've got good rescue close by. We've got, you know, good risk management all through. This is insurable, right? Absolutely. Insurers are going to eat that up. That's what they want. They don't want claims very often. And when they do, they don't want them to be $10 million claims. They want them to be $60,000 claims. Not very often. Now, the same thing that's low frequency, not going to happen very often, every 20 years, let's say, or every 10, but it's a fatality. It's of high consequence. right? So what does that mean? This means that they're going to spend hundreds of thousands defending, and it means that they could pay out a whole bunch of money when they do, right? So will they insure this? Yeah, probably, right? So this is the avalanche in a business that happens every 20 years or maybe never, right? What about high frequency claims every year, but they're small? The administrative costs for this, the insurers hate, right? And so, yeah, okay, they might insure you for a while, but they're going to get tired of this, right? And so you don't want to be bringing lots of small claims to them. You don't want to be bringing small claims to them at all. So I would say, even though you've got insurance and you got a couple of $1 million of coverage and you got a $5,000 deductible, you have to ask yourself, do I want to take this to the insurer at all? If there's a $10,000, medical bill that'll get rid of a claim, maybe I want to pay that for the guest. So you need to ask yourself that. I wouldn't be taking low consequence, high frequency events to insurers very often. Okay, this one, high frequency, high consequence. Okay, is that insurable? No. So if an underwriter thinks that there's potential to have accidents frequently with high consequence, meaning expensive, then they're just going to say, no, we don't do that, right? So partly what you're doing is presenting what kind of incidents your business might see. And you need to educate the underwriter about that. You need to remember, most of you are not getting your business proposals to an underwriter that understands adventure tourism. You're probably not getting them to one of those 3 programs that are in Western Canada, where the underwriters are intelligent. They've been in the adventure business for 15 or 20 years. They totally understand the risk management, the accreditation program, all those different things. So what you're doing is probably not getting your proposal to them because they're not covering Atlantic Canada. And so you're ending up with a broker who doesn't specialize in the field, an underwriter who doesn't and may not understand it at all, and maybe an insurer who doesn't either. So the onus is really on you, and it's problematic when that's what you're dealing with. Okay, what does appropriate risk management documentation look like? This is really your risk management plan in many ways. It's your loss control program articulated to the underwriter. So you've got business structure. You might be incorporated or you might be a proprietorship. There's probably more risk to you personally as a proprietor than an incorporated structure. You've got a risk management plan which articulates everything we've talked about so far, meaning the loss control program. And it bundles all these documents below here together into one place. So what's your trip planning? What have you done? Do you have written trip plans, and do you have written emergency response plans? If you do, is the underwriting seeing that stuff? If you do, and it's not going forward to the underwriter, how are they supposed to know what your planning looks like? If you have none of that, then you need it. Plain and simple. Okay, staff training. What do we have from a staff training perspective? From manuals, policies and procedures, emergency protocols, what kind of safety talks, what kind of media plan, what kind of reports and forms do we have? And is that going forward to the underwriter? Because it should be. This talks about the professionalism of your staff their qualifications, their training by you, the company, and then their procedures, right, on a daily basis. This is important, super important. And then what are the clients getting? What are the client materials? What are they getting for joining instructions? Are they being educated about the risks associated with your thing, or do you totally downplay that? What's on your website? Are you promising safety? Because you can, right? Are you educating them about the potential risks and the hazards and what to bring and all those kind of things? Or is your website just a marketing piece? Because that's not the same thing. What educational materials are on there? What waiver, assumption of risk, waiver of claims document are you using? What does it look like? We're going to talk about that in a minute. How professional is it? And here's the key. Would it stand up in court as a complete defense? Because without it, why are we doing it? What kind of medicals do you have and what kind of releases? These two things are connected. And indemnifications do you have? So this is what a risk management plan looks like in conjunction with all the loss control stuff. And I would say that if an underwriter isn't getting these materials, then they're just guessing at your business. Now I need to switch my screen and just pull up a second piece. Stan, are we doing okay there?
You're doing great. So, question.
This should be a good time to do a couple questions.
Yeah. So there's a few questions there. I've been kind of answering them. Not that I'm the expert. I'm just answering because I know what you've told me. So there, you're going to send us 3 different files that will be more practical, that people can work their ways through some of the stuff. Number one. Number two, obviously we're recording this and I'll be posting it, or some will be posting on the HNL's YouTube channel to watch it afterwards. But there was a question about clarification on companies offering coverage presently in Newfoundland, Labrador. So there's companies doing it, but what is your understanding of that, Ross?
My understanding is that you will have a number of brokers and insurers who are in the market in relatively good times. Yeah. But part of what you're struggling with now is, as it tightens up, this isn't their field. They've just been doing it because it's been easy money.
Easy money.
Okay. And so what you don't have, and I'm going to talk to HNL about this in this presentation, what you don't have, but which is a possibility, is a program with an MGU or an MGA that actually gets at some of this stuff.
Okay.
Okay. And I've talked to the 3 programs that are in Canada that I'm familiar with, and all 3 have said we don't have a broker that we work with in Newfoundland.
Okay.
And 2 of them only are in Ontario West. And those are the 2 I work with the most, and I know them really, really well. Okay. The other one, as I mentioned earlier, which I'm going to give everybody the website for, does have an agent in Nova Scotia. So I think that people, and probably HNL, need to talk to them about whether they would expand their program, because it looks like a pretty good one, into Newfoundland and Labrador.
Okay. That's where we used to go. Nova Scotia was where I got ours for years.
Yeah, and I'm happy to work with HNL on that, and even individual businesses, just to give them advice and things. But I think that by the time I'm done today, people will have a pretty good idea.
Okay, and just because I think it's right on this topic, there's a question there about a guy here has received coverage from Oasis Outdoor Adventure and Sport Insurance Solutions based out of Saskatchewan. Are you familiar with those guys? Like, you've heard those guys before?
Yeah, absolutely. And
Okay.
they do stuff across the country. They do stuff in the Yukon and things as well, right? And I don't have not done work with them,
Mhm.
but I've seen their policy and different things like that.
Okay. Okay. Perfect.
I think that you want to go wherever you can to get insurance right now in the next over the next couple of years, and the options will open up um, 2 years to maybe 3 from now.
Yeah. Yeah.
Okay, we're 1
Okay.
hour in. Can you see this new slide
Yeah.
stand? Okay.
Exclusion of liability and
Okay, we're 1 hour in. I want to talk about waivers, and then I want to get to the insurance programs a little bit more. So that's really what I want to do for the next little while here. It doesn't matter what language you use when we're talking about waivers. Um, there are people use different stuff, right? So exclusion of liability, it's a contractual release because it's a written contract between adults. It's a release of liability. It's a waiver of claims, which means we won't sue you. There's an indemnity agreement, which means I'll pay you back. And there's assumption of risk stuff in it. So it doesn't really matter what language you use. I mean, mostly we're using waiver as a slang term, but it really refers to a holistic piece of a bunch of different documents. Now, I want to acknowledge that the expert here, I'm not a lawyer, I'm not an insurer. I've done a lot of work in this field for a lot of years, but the expert in waiver law is in Vancouver. Robert Kennedy is a lawyer there at Ferris and Company, and he's the guy, right, who does most of the defense work in Western Canada and has also built the waivers. Now, I know you can't read this. We're going to break this down in a minute. I just want to show this to you. This is the accepted standard form right now for waiver. If yours does not look like this, it's out of date. Okay. If it doesn't have the color, the red and the yellow boxes, it doesn't have the bold highlights and that kind of stuff, then it's out of date. And you probably need to do some work on it. I'm going to break this apart in just a minute. The other thing is that we're finding is that an awful lot of the claims we're seeing are claims around slips and falls and stuff like that. And so this now is the standard signage that we're using in the west of Canada for facilities, right? Um, and ski hills and different things. And basically, all it is a warning signage. It's not a signed contract, right? But it's trying to provide some responsibility and making the guest or the user of the facility responsible. So this is now the model, color included and wording. I can give these to Stan. I may already have, I think I have. And so he can circulate these. So if you are using facilities and you're seeing slips and falls and that kind of stuff, then there's some warning signage here as well. Now, waivers are really a number of different legal documents wrapped into one. Not all provinces like them. Quebec does not, right? Manitoba calls them immoral. But most provinces, their courts will support them. Newfoundland and Labrador uses them. So I'm just going to preface it by saying that. But they're really a number of legal documents all on one page. They're an assumption of risk. They're a waiver of claims. They're an exclusion of liability. They're an indemnity. And they're jurisdiction and choice of law clauses. And so this is an onerous document. It's one-sided. It's non-negotiable. You, the business, have written it. And you're telling your client, if you don't sign this, you can't participate. So this is not a negotiable contract. You're not buying a house here where you're negotiating price and terms. This is an unnegotiable piece, which is why courts don't like them, right? They enforce them because it's Canadian law, unless a province has specifically passed law to eliminate their use, right? But they're an onerous document. They are a complete defense, right? So one of the first things that lawyers do in defending an adventure tourism case is they go to the judge and ask for a summary judgment before you ever start going to court, and have the judge rule that the waiver is a valid contract that eliminates the court case, really. So waivers are intended for adults. They're not intended for minors. Canadian law does not enforce a waiver with minors. A minor cannot waive their legal rights, and a parent, hear this carefully, a parent cannot waive the legal right of their child. In some states they can, but in Canada they cannot. Now, there may be some reason to have minors sign it. If I'm over 13, let's say, there's educational value, there's warning value. If I'm 16, 17, 18, even better, right? But it's not an enforceable legal contract in that sense. But it is between adults. Now, the main purpose is to educate, share, or transfer risks, and from the provider, meaning your business, to the participant. So remember that what you're doing is you're transferring some of the responsibility and the liability and the cost to your guests. So there's a philosophical statement there, right? A waiver is also a contractual agreement where the client gives up or abandons any claim in the future to claim from the business should an accident occur. So this is what you're after. Now, you may or may not like this, but your insurer does, right? And we're talking about insurers here. We're not talking about your philosophy of life nor mine. These are onerous documents, right? Done right, they can be a defense, which your insurer will like. Okay. They can act as an information tool, assumption of risk, indemnity, a deterrent, a defense option, all those things. Now, there's three things that you need to think about with the waiver. One is the content. What's the wording? And the wording has to be absolutely perfect. If you remove a few little things or you change them around, you might create an undefendable document. So the content, which we're going to look at in a minute, the content is absolutely crucial, that it's done properly and it's defendable. Number two, the design, the style and the form, the color, right? The initial boxes, the bold headings, the capitals, the use of the word negligence, those things are absolutely crucial. So you do not want a waiver that's mixed in with registration forms or photography releases or medical forms or anything like that. The waiver needs to be completely standalone, and it needs to be absolutely, completely clear what it is, right? So the design of it is super crucial, which is why we've got the yellow boxes and the red borders and the capitals and the bold and all that kind of stuff, right? And then the third piece is a presentation process. How they're delivered, when they're delivered, timing, how often, does the user understand it? Are there signatures? And what's your record keeping? So in general, you need to present your waiver to your guests before they pay you. And they need to get agreement from the guest that they sign the waiver or they agree to the waiver before you get paid. Now, I know that's problematic in some places. That's just the way it is. The other thing is, it needs to be absolutely clear what it is. They need to understand what they're signing and the implications of it. So on a website, your waiver needs to be there in numerous places at numerous times, right? It needs to have signatures and witnesses and all that other kind of stuff to it. We could talk about waivers for days. I'm just doing a 20-minute piece here. Now, presentation of the waiver, provide advance notice, right? You need to be aware of the intent and seriousness of it, and they need time to read it and understand it, right? If you're a day trip business, whale watching, sea kayaking, hiking, whatever, and you're using waivers, then you need to kind of figure this piece out. If you're running multi-day trips and they're coming for a 6-day sea kayak trip and they're booking ahead of time, this is a little bit easier. Okay, so it's important to establish that the client knew what they were signing. The design, format, layout should speak for itself. And the design and layout should strive to emphasize the intent of the waiver, not hide it. So you see sometimes a waiver tucked away, you know, a couple paragraphs in a registration form. You'll never defend that in court. So it needs to be a standalone piece. Okay, I'm going to break it apart into 4 pieces. And we're going to look at each of these pieces separately, just a little bit. I'm not going to get hung up on a lot of detail because we just don't have time for that. In general, this is what the introduction looks like, okay? It's yellow, red, bolded. What it is, release of liability, waiver of claims, assumption of risk, and indemnity is really clear. And then there's an initial thing over here, okay? A place for name and address. And right here, this is where you would amend this waiver, okay, to put your business name in here. And you would put Newfoundland and Labrador here, right? Because you're also, if you're using a permit or anything like that, you're naming the province and your waiver is actually defending the province. And directors, officers, employees, instructors, guides, agents, representatives, independent contractors, subcontractors, anybody in the delivery chain of your product, you want on here. You definitely want employees, you want contractors, you want agents, all that stuff. In a real lawsuit, everybody's going to get named. So you want the waiver to cover everybody. Your guide, who is leading the trip, is going to get named in person. Your business is going to get named in person. The agent that sold your trip for you is going to get named in person. The province is going to get named in person for allowing you to operate on Crown land, right? So you want everybody in the supply chain to be named on that heading. There's a definition section. Now I've just used a generic waiver here. This generic waiver is wilderness activities, okay? And that would cover off a lot of stuff, but it's not limited to all these different things here: hiking, wildlife viewing, backcountry, whatever, okay? Now, better than this would be to amend this document so that it was specific to your business. So if your business is sea kayaking, then we want to change this to sea kayaking, and we want to have the definition sea kayaking specific. That would be better, right? And then in the assumption of risk section here, we would also change this around so that it wasn't generic wilderness activity stuff like ridge tops and steep pitches or trail or route is less defined, all this kind of stuff. We would make it sea kayaking specific, okay? Now, this is the new language for COVID, right? So that's new in the waivers. Infectious disease contracted through virus, bacteria, parasites, fungi, which may be transmitted through direct or indirect contact. And then you also need to be really clear that this is about negligence. In Canada, waivers can protect you against negligence. That's why they're used. You can be negligent and contract your way out of that. That's what this document says. You can't be grossly negligent and you can't be criminally negligent. Those are the other two forms of negligence, but we're not grossly negligent and we're not criminally negligent. Criminally negligent means you intended to hurt somebody, so that's not what we do. So what I'm saying is this definition section and assumption of risk section is the section that could be customized to your business. Don't touch anything else, all right? Okay, this is the release portion. In consideration of the releasees, meaning the business, agreeing to the guest's participation in the wilderness activity and permitting my use of their services, equipment and other facilities, I agree as follows: to waive any and all claims that I might have against the business, etc. Okay. And so all of that is there. And then you need to tie it to the province solely in Newfoundland and Labrador, that kind of thing. So we would mend this a little bit as well. Okay, and then at the end, you would have a place to sign and witness. Here's a witness, printed name. Here's a signature, printed name. And if you're going to use this with minors, the minor would sign here and the parent or guardian could sign below, right? So that's the components of the waiver. It's intended to be customized. And I'm going to give you a contact in a minute of somebody who will do that with you. Now, I want to be clear about minors. Canadian law will not enforce a contractual agreement with a minor, right? Parents cannot sign and waive the legal rights of a minor child. And the child cannot contract out of negligence. That's Canadian law right across the country. However, right, there's educational value here and warnings and that kind of stuff. Under the age of 13, probably not worthwhile using a minor, a waiver for a minor, right? And have both the parent and the minor sign. It won't be enforceable as a contractual defense, but it will be helpful to us defending. Okay? Now, paper waiver law is way better than electronic waivers. And I'm going to talk about electronic waivers in a second because I know that everybody's moving towards them, but they're not that great. So if you can get a paper waiver and keep that for 7 or 8 years, that's way better than electronic. So if you can get a signature on a paper waiver, please do so. It has more to do with the dynamics of arguing a waiver defense in court because you have hard copy evidence to bring into court and show the judge, right? And there's a signature on it. So that's really kind of it. Now, electronic waivers, I know that lots of businesses are moving towards this, but you just need to understand something really clearly. We don't know what's going to happen. Right now in Canada, there's only been 3 electronic waiver rulings by judges. 2 of them were losses, meaning the waiver did not hold up in court. There's one for go-kart, right, that was upheld in Saskatchewan in 2019. And then there was a BC case in Taekwondo, and there was an Ontario case for trampoline park. Both of these were not upheld, they were thrown out. So in all of Canada, we only have one case where electronic waiver was held up by court. And we have dozens and dozens of paper ones. You just need to understand that we don't know enough about this electronic waiver law. We have a ruling in BC that said they don't like them. So we're doing everything we can to not do these, or if we do them, to actually really try and do it right. So this is a new area of law with little court success and lots of unknowns. So if you're moving to electronic waivers, you just need to know and be absolutely clear. You do not know if it's going to work as a defense. If you do not know it's going to work as a defense, then, why do it, right? So lots of the waiver software programs, they're all private companies, right? Making money off this, but they have a hard time with the structure, the bold, the capitals, the color, and the paper waiver format, right? Some are getting better, but they're not there yet. And many cannot kind of do I agree and signature buckets and all this other kind of stuff in the way we need them. They are getting better, right? So we need some customization here. Now, Karina, who works with me a lot, who's in Australia right now for some family matters, this is what she does. So if you want to write down karinastaffordconsulting.com, Stan can give this out later. Info@karinastaffordconsulting.com. Karina's on the call right now. So if you have questions for her at the end, you're welcome to ask her. But Karina can help you implement an online waiver program on your website, right? Remember, even with her help, we're not completely sure of the success of these. So there's still some questions. Okay, but that's her contact information. If you're integrating electronic waivers with your guests, I would recommend that you talk to her about that. Okay, we're only a few minutes away from wrapping this up. I want to talk specifically about strategy for business and for programs. Now, we're going to flash back to HeliCat Canada case study at the start. Remember that that's an insurance program, okay? It's not just a hairy-fairy little thing. And so that program includes the combined, it was put together with the combined expertise of an insurer, the underwriters, the brokers, the defense lawyers, the experts. It has well-defined operating standards, which are in detail, right down to what an incident report form should include, right down to what's in a guide's pack, right? Everything about running a helicopter or snowcat ski business. And that's the external standard that all the businesses are accredited to. Now, I don't know of another accreditation program in Canada where in order to operate, you have to meet the standards. But that's what makes this defendable. Okay, it's supported by all kinds of stuff. Incident prevention and response protocols, equipment standards, waivers that are translated, defense incident investigation, everything. As soon as there's an incident, the lawyers or experts are on the site right away doing the incident investigation, collecting data for defense. We can't go back and rebuild that in 6 months when the snow's melted, or even in 6 days. So the response is immediate out of this team, right? It's directed and paid for by the insurer, and the broker is the key person who approves all this stuff. They're an MGU, right, etc. So I just want to reiterate that. And over the years, there have been a couple other programs like this that have been built. Stan's going to send you a handbook for a program that I built for insurers in 2003. that is no longer in place anymore because the market softened. Although in the last 3 months, I've had 2 insurers call and say, you know, should we revisit this again? So we just need to understand that there's some stuff there. Now, how is risk measured in adventure tourism, right? And what this is how defendable are you? So what's your documentation? Is it defendable, right? What are your operating guidelines? Do you have any? Is it an external standard or is it your own? Or is it nobody's, right? Do you know across Canada what the actual operating guidelines are for what you're doing? What's your loss control program? What's your strategies? And are they articulated in writing? What are your guide qualifications and competencies? Are they qualified or are they just qualified by your business? Or is there some external standard? What are your administrative procedures, for example, with waiver collection and storage, etc.? How big a business are you? If you're running 100,000 client days, that's a different risk than if you're running 1,000 client days. So the volume will impact how they look at the risk. Also, what's the activity risk? What is it you're doing? And what are you doing it on? So I'm going to go back to the canoe trip, kayak trip. If you're paddling on grade 1 to 3 water, that's a different risk than if you're paddling grade 5 water. So some businesses are finding that grade 4 or 5 water is uninsurable. So they have to make a decision. Are they going to change their program down to grade 3 water, which is insurable? For example, a couple of the programs I've worked, as soon as you go from grade 3 to 4 water, the premiums double. And they charge premiums in that case per client day. So if I have 1,000 client days on grade 3 water, I might pay $1.50 a client day. If I've got clients on grade 4 or 5 water, I might pay $3 or $4 a day. So they're rating the risk of what it is you're doing, right? What's the terrain you're operating in? Is it simple, challenging, complex terrain? This is mountain terminology in Western Canada for avalanche terrain. So for example, if I'm a mountain guide, that's my background, that's my professional background originally. If I'm a mountain guide and I'm guiding ski touring in challenging terrain, that's one thing. If I'm guiding ski touring in complex terrain, that's something different. In fact, in Western Canada, unless you're a certified mountain guide, let's say Boy Scouts or Girl Guides or a school, you can only do ski touring in simple terrain. You can't take them into complex terrain for any reason whatsoever. And you can only go into challenging terrain with a certified mountain guide in charge. So that's how limiting this is and how important it's considered. Okay, moral risk. This is an interesting one. What's your reputation? So I did some underwriting a bunch of years ago, or worked with underwriters, and they would say to me, can you make a couple phone calls to find out about this business and the owner, or can you make a couple phone calls to find out about the guide, right? And usually within a phone call or two, I could find somebody who could talk to me about this business or this person, right? So moral risk is actually one of the things that's considered in the underwriting. And then the other thing I talked about before is claims and claim history. Do you really want to be submitting a whole bunch of claims? So I built a underwriting program once for adventure tourism underwriters. And this is what we built it around. We built it around these 10 things. And this is what underwriters are looking at. So if you're an individual business, what should you do? This is strategy, right? What should you do strategically? You need to not have incidents. That's one. You need to be defendable in court and prove that to an underwriter. And you need to catch the attention of the underwriter and the insurer. And you need to do this in seconds. They are not going to spend 30 minutes looking at your proposal. They're not going to spend 15 minutes maybe looking at your proposal. Right now, they're getting hundreds of proposals from people who are freaking out from insurance. They know they don't have the capacity to underwrite everybody. So they go instantly to the most professional presentation and then they take a look at it. So you need to catch their attention and you need to be a little bit careful here. Now the broker works for you. They don't work for the insurer. They work for you, theoretically. So your broker needs to help you present your case in the best way possible to the underwriter. I would say most brokers aren't helping with this. Some are, but very few. You need to meet an appropriate operating standard and you need to be able to articulate that. You need to develop an appropriate loss control program and you need to communicate that. You need to describe the loss control program in your documentation and you're writing to the underwriter. You're not writing to the broker and your insurer will never see it, right? Present your case professionally because that speaks about your business. So design and nice color pictures and whatever, that's nice, right? And make sure the broker forwards your risk management materials to the underwriter. Giving your broker all these materials and them holding on to it isn't helping your case at all, right? Dazzle the underwriter 5 minutes or less. So the front end summary, executive summary, it's 3 pages in your risk management plan is super, super, super important, okay? Have a great waiver. Make sure the underwriter sees it. If you don't have a waiver, it's problematic. That's how we win cases, right? And the only other way we win cases is to be able to prove you weren't negligent. And then consider, this is a little different, but consider asking for less policy coverage for the next couple of years and consider your deductible. You know, what are you really prepared to take? And what can you afford to kind of risk on that? Okay, go back to this and use this as a structure of your loss control program. And then I've given Stan, who is going to send to you after we're done here today, I've given him an adventure insurance program guide. This is the guidebook that we developed for adventure insurance program. And in it, it gives you a template for a loss control program, a risk management plan, example, trip plan, emergency protocols for guides, safety talk template, a risk assessment and management system plan, incident report form, and sample waiver. So what I've given you is a template, right? This is no longer in use because the market softened and the insurers decided they didn't need it. But I think you're going to see it pop up again. And you need to really communicate to the underwriter. Okay, the one specialty risk insurer that I found that of the 3 I mentioned earlier, the other 2 will not cover you in Newfoundland and Labrador, is this one. Now, they do not have a Newfoundland broker right now, but they have one in Nova Scotia. So what I would suggest is that you take a good look at that website, go through it, because they've got quite a bit of material of what they cover and what they don't. And then you can take a look at their application forms. What they've actually done is taken forms from this program here, and they've rejigged them into their structure. So that's where a lot of their application forms and operating standards and stuff came from. But I think for what I've been able to find, this probably stands the best chance if you don't have insurance. Oasis out of Saskatchewan, for some activities like hunting and fishing and those kind of things, that's kind of their specialty. They may or may not cover some of the adventure activities. In British Columbia, they don't cover a lot of what we do: climbing, skiing, whitewater rafting, some of that stuff. Okay. Okay, I have 2 more slides. Now here's a conversation for Hospitality Newfoundland Labrador, because what can you do? If, and I don't have a good sense for this, I do from some other provinces and territories, if you have numerous businesses who are not getting insurance, or their premiums are doubling or tripling, then there probably is room for HNL to step up and to negotiate with an MGA or an MGU to develop a specialty insurance program for Newfoundland and Labrador. This has been done before. I did this for COTA, Council of Tourism Associations in British Columbia. That's now Destination BC, but they play the same DMO role that HNL does. And we developed a program, and I've recently done the same kind of thing for the Yukon. So I think there's room for Hospitality Newfoundland, if there's really a huge problem in your province, to actually sit down with an MGA. I would probably start with one of the brokers that are already working in Newfoundland and Labrador, or this one who's in Nova Scotia and could expand it. What you're working against is you're not very big. As a collective, you don't have many businesses. Probably not as profitable as some of the Western Canadian ones. So there's less room to move on some of the insurance pricing and stuff. Out here, we're seeing the same increases. Businesses are just absorbing them. So that's a little different. So I think there's a role, if it's crucial to HNL, to actually start looking at whether or not, there's enough business in Newfoundland and Labrador to make this worthwhile. I doubt there's enough to develop your own program from scratch. But to piggyback on one of the others, find a broker in Newfoundland, Labrador who could become an agent for one of the other programs. So then you're talking about Goujon, you're talking about Equa Specialty Risk, and I can connect you with them. I know them really well. And then you can talk about this one right here. So you've got at least 3 options to talk to and to see whether or not they could expand their programs into Newfoundland and Labrador. Okay, I'm talked out. I'm done.
That's good. That was
I'm
good.
going to shut this off.
Okay.
And if there's any questions, I'm happy to take them.
Okay, that was good, Ross. I've seen you give this presentation a few times, and every time I learned something. So that was excellent. Well done. I'm glad you mentioned the electronic waiver thing too, because the last number of years I've noticed that, and I've been wondering where that sits, because it definitely is the way a lot of the tourism industry is going towards, I guess, for storage reasons, for other reasons, to have folks use electronic waivers. So I'm really glad you brought that up. Before we get into this, there's one question there, but I'm sure some of the people can put up their hands if they want. One of the things I had, I thought, the what you should do page is really valuable near the end, because whether you're adventure tourism or hotel or whatever you are, you can't find insurance. I think that's really important. So the question I would have is, how do you take that what you should do and how you measure your risk, those kind of 2 pages, when you do a bit of work on that, how do you then ensure, well, no, I'm using ensure as the wrong term. How do you then try to make sure the broker is educated on you. Like, how do you know what I mean? Like, you do all this work. If the broker doesn't understand what you're doing, is that not lost then?
Yeah, it's totally lost. You got the wrong broker, right?
Okay.
And that's the thing. That's the key. The broker's key. And so bringing a broker, you're way better to deal with an MGU or MGA who have the ability to speak on behalf of the insurer, right? They also have the ability to build a program, and they also have the ability to do the underwriting. So when they understand your market, now you can have an intelligent conversation. The same with a broker. Now,
Right.
every insurance broker selling tourism in Newfoundland, Labrador, it makes sense to me that they would want to have this conversation with you, and you educate them. I can help with that, but you educate them about who their underwriters are. Who are they sending these things to?
Right.
Right. So who are you sending these things to, and what are you sending? Because generally speaking, all people are doing is filling out a 3 or 4 page application, and that goes forward. So how is an underwriter who doesn't know anything about Newfoundland and Labrador supposed to decide when they could take their money and send it to BC? I just saw a note, there's 168 tourism operators on your list. In British Columbia, there's 3,000 adventure tourism operators, right? It's just a completely different game. So I think that you need to find a broker, preferably an MGU, but a broker, sit them down, have really great conversations open around who they're sending stuff to, who's their market, meaning who's the insurer, who's the underwriter. And if you can get a room with the underwriter and the broker, and now say, okay, what do you need? Right? Because it's not appropriate, it's not suitable for us not to be able to insure all our businesses. That's not on. So we need to find a solution. What's the solution?
And that's the key. And the cost it's gotten so crazy. So also it's a question there, Ross. Can you give an example of how developing a program with H&L would benefit? I think you kind of have, but what would be an example? Like something you did with Coda, like that helped them.
Yeah, the Coda thing was big, right? So the Coda thing was, here's the operating guidelines, external association operating guidelines for every adventure tourism sport, right? All the way down the list. And then here's the loss control program that we want articulated. Here's the risk management template.
Right.
Here's the waiver that you must use. Okay. Here's the other forms you must use.
Just standard, but you make it specific to your own company, but you follow the exact same format.
Exactly.
Yeah.
Right. Exactly. And that was our roles to help do that for each sport. And then we went to the other side. We went to the insurer and the underwriter, and we negotiated the program with them and said, all right, what do you need? What do you need to be able to do the underwriting? So we developed, for every adventure sport, we developed that criteria I showed you of how to assess the risk. So we trained the underwriter what's important and what's not. And then we developed all the application forms, right? And everything.
Right.
So it was a complete package.
Yeah.
Now, do you need everything that's in there? Probably not. But in 2001, there was no insurance.
Yeah, it was tough. Right? I remember that.
And so we had to build 2 or 3 different programs. That's when the HeliSki program was built.
Okay.
Right. And then the generic one. So I think that would start by somebody at HNL trying to do a little research on the MGUs that are in the marketplace, having conversation with the 3 programs that are in Canada now, and asking them what they would need to get into Newfoundland.
Yeah.
And the problem is, I don't want this to sound wrong, and I don't want anybody to get mad at me, but it's just a little less sophisticated. The fact we're having this conversation tells me that it's just a little less sophisticated in its understanding than in other places.
Yeah.
And if these 3 insurers are not in Newfoundland already, there's a reason.
Yeah.
So that needs to get ironed out and resolved. It's not going to happen by next Monday, but it's definitely doable over time. And I think that what you're after, a couple things. One is everybody needs to realize that in 2 years, this will be softer and it'll be more like they've been familiar with for the last 10, right? But you just need to also realize that adventure tourism insurers do not make money off adventure tourism. We see 1 or 2 big lawsuits and pay out $2 or $3 million. It wipes it right off countrywide.
Yeah.
Right. It's just not big.
Yeah. And that's the challenge. Okay. That's good. Well, that's my question. Anyone else out there want to type something in or turn on your screen or raise your virtual hand or your real hand?
Okay, I can look. I've got the chat up now. I can take a look.
I think you've tackled most of that stuff on the chat.
Yeah, maybe.
Yeah. Yeah. So I think a big thing too, Ross, will be I'll send out at the end of this. I'll send out a survey with the 3 attachments that you sent to me, which you referenced a bunch of times, and that'll help too. So yeah, and we might follow up. I might follow up with you on some of the things that were discussed here as well, Ross, because this is very valuable.
Yeah, no problem. I'm happy to help. No problem. And if people have questions they want to send to you and you fire them to me,
Okay.
I'm happy answering stuff by email and all that. No problem at all.
Yeah, I mean, this session was our 3rd on insurance, and it's basically we're really trying to continue the knowledge people have of what insurance means and understanding and educate the industry overall, not just the adventure crowd, but the overall how to try to, get reasonably priced and understand your insurance better. So that's where this is all coming from.
Yeah, you bet.
Yeah. Okay, that's the thing. Cool. All right. Well, listen, this has been great. Once again, it's been excellent. Thanks to everyone that joined. I know it's Friday. Well, it's Friday afternoon here, Ross. So we're getting at the end of a busy work week. So thanks, folks, for joining. And I know some of the names I see on there. I know you, but I've also seen a bunch of the stuff that HNL's done the last month. And I know Tourism Awareness Month has been busy, and there's a few more sessions that they had to kind of finish off Tourism Awareness Month. So thanks so much for attending. I think it gives a lot of value. It helps professionalize the industry and helps make our industry more sophisticated. So if you have any other issues, guys, reach out to me and I'll reach out to Ross. And this afternoon, I'll get out that survey and all those attachments that Ross has promised us. And you guys can go through them and personalize them and pour over them and see what makes sense.
Thanks, Dan. Thanks, everybody. Great to have you on.
Thanks, Ross. All the best, guys. Have a good weekend.